This is your income projection for 2025 from this ETF. Investing $25,000 is going to give you 660 per month or annual income of 7,921. Remember, this ETF pays monthly distribution. If you invest a $50,000, you're going to get only 1,320 or 15,842. Investing up to $100,000 is going to give you only 2,640 or 31,685. Up to 200,000 is still not going to give you a lot of money that you might consider maybe retiring or be enough. But I'm going to show you another method you can do that will make your portfolio become $1 million portfolio from this ETF. The only money I can see here that will actually make you maybe able to retire, it depends where you live and depends on your expenses. Maybe with 300,000, that's going to give you up to $95,000. But if you pay taxes, you might end up paying 35 or 30%, and that will give you only 60,000 annual income, and that might be enough for some people. But so far, we see this is not highest yield ETF, but it has a great return. I'm going to show you in a bit. The ETF I'm going to shed light on today is going to be from Curve ETFs, and this is TSLP. And the main reason I'm going to talk about this ETF is that I noticed a lot of people have been paying attention to YieldMax Tesla. I'm going to compare between this ETF and Tesla from YieldMax and show you the difference between those two. And also, I'm going to give you a description about this ETF. And then finally, I'm going to give you the full math of how you can invest only a little bit of money, and your portfolio will be $1 million portfolio in just a few years. Now, if we look at the price of today, Tesla has crashed today. The Tesla stock itself went down, I think, 7%. So it's a pretty with the power with the actually underlying stock itself, which is Tesla. And after hours, it seems to be going up again, up to 4%, 52-week range between $16 to $34. So at one point, it had a great return, but it retraced back to where it is right now at 23. But remember, you were receiving those distributions. So if we look at the math with distribution, this is going to be a lot. Now, if we look at the yield here, it says 16. Of course, this is not the actual yield. Net asset right now is about 9 million is invested in this ETF, and expense ratio is 1%. You are wondering which ETF should you invest in. This is the numbers I'm going to show you here that will determine or make easier for you to decide which ETF you should go with, either YieldMax Tesla Option Income Strategy or Neon ETF from Curve. So the price of Tesla, it's $11 from YieldMax, and Tesla from Curve is $23.86. You might say I'm going with the lower price because it's $11. That is not all. You have to look at all the numbers that I'm going to represent to you here. The comparison here is 1 year and a half. And the reason is because this ETF has only been out for about a year and a half, and this ETF has been out for more than 2 years. Apple to apple, we're going to compare exactly the same time since this was incepted. Since this ETF was incepted, has outperformed Tesla from YieldMax by almost 20%. This has returned 42.06%. And Tesla from YieldMax has returned only 22%. Now, the dividend yield, this one is 77% and this one is 50. So you might go with this ETF because it has a higher yield and higher dividends. But end of the day, this one has returned more. So you would have more money on this ETF, even though the dividends that they pay a little bit lower. Initial balance for the period of comparison, a year and a half. Initial price you would buy at $22. This is 25. Initial share is for 139 shares. Initial share here will be 399 shares. Dividend you've received within the year and a half will be 9,981. This is only going to be 4,978. Your overall balance, 12,257 from Tesla and 14,261 on TSLP, which is going to be 42%. You would have gained 661 shares and you've gained only 197 shares. But remember, this has double the price of this. Based on this comparison and return, this will determine which ETF you're going to go with. If you are caring about more dividend per month, then Tesla is going to be for you. But if you care more about overall return, TSLP from Curve will be the best ETF for you to invest your money. Now you know which ETF is a better. TSLP Curve Yield Premium Strategy Tesla ETF. This ETF distribution rate right now is 51.32, and this is based off the last distribution that they paid. A potential benefit of Curve Yield Premium Strategy ETF. Enhanced income strategies focus on generating monthly cash flow through diversified multiple sources, including harvesting cover call option premiums, dividends, and interest income. Dynamic optimization, balance between income versus capital appreciation potential in certain rising markets. Lower beta to underlying stock could be used as defensive substitute for a single stock investment. So, meaning lower beta, it has a lower volatility as compared to Tesla stock itself. Tax advantage. Option premium may not be immediately taxed and therefore has a potential to offset short-term tax liability if you're investing in taxable accounts. Investment objective, Curve Yield Premium Strategy Tesla ETF seeks to provide current income while maintaining the opportunity for exposure to the share price of the common stock of Tesla, subject to a limit on potential investment gained. If we look at performance since inception on a quarter basis, this ETF has returned about 71.67%. This is the market price. And on top here is a NAV, a net asset value. But on annualized base, 1 year has returned about 86.30%. But since inception, cumulative total return has returned about 53.26%. So pretty impressive. Main top holding treasuries, 33%, 32%, 27%, and 30%. And there's other government bonds from Fidelity. But all in all, almost 90% of this is invested on treasury. This ETF uses the same strategy as YieldMax ETFs. It's synthetic cover call writing. So they have this as a collateral, but they are receiving interest from bonds, the premium they're making from call options. Those two are the main factors for your distribution. There's a Tesla call option which expires on March 21st, 2025. Another one expires on April 17th, 2025. This is a put. So that's it for the holding. The first time they paid distribution was on November 27, 2023. And the last one was paid on February 6, 2025, $1. That was a little bit higher, but it ranges from 57 cents all the way to 130. All distributions, again, an average of 63 cents per share. All distributions, they've paid $10.15. So if you take the $10.15 added to the price of today, which is $23.86, that's going to give you 34. If we take the price of today using the average distribution, which is 63, that's going to give you annual yield of 32%. I showed you earlier how much you're going to receive. This is based off that yield. If this price drops, the yield will increase and your income will increase. But we know this income is not sufficient enough for most people to retire today. I'm going to give you another math to show you how you can actually retire with just 32% within just a few years. This is the final calculation I'm taking you to, and this is for people who want to invest their money today and let it grow for 10 to 15 years. I'm going to show you a progression of your portfolio. Assuming the yield is going to remain at 32% and the distribution per share is 63 cents, you started with $50,000. Total dividend within second year is $16,000. And that will increase your portfolio from $50,000 to $71,120. You're reinvesting all your distribution. Year 3, you're going to have $98,000. And at that point, you're going to receive annual dividend of $35,000. You see how the reinvesting all your money is going to generate even more money. The calculation I showed you earlier is that you're going to receive dividend that they are now compounding. Here, all your distribution you're receiving reinvest back, they keep compounding. The year 8, you're going to receive 83,000 in distribution and your portfolio is almost 400,000. Year 10, your portfolio is 600,000. You have a lot of distribution, but your portfolio is not a $1 million portfolio. And your main goal here, you want to be a millionaire. So you're going to let that money grow a little bit, compounding for just 3 more years. That will go to 1,146,000, your distribution at that point will be 200,000. If you let that money grow for 2 more years, this is the 15th year, your portfolio is going to be 1,689,000, so almost 2 million. And at that point, you're going to receive over a 293 in distribution. So that's the math you're going to do for people who want to invest today and let their money compounding. This math I just did here, guys, is based off this yield here and this distribution. If there is no change in terms of price, either up or down, and the yield remain the same on average 63. That's how you can invest only a few amount of money from $25,000 to $300,000, generate monthly income for now. Or the other method I showed you, you can invest today and let your money compound, and you'll be a millionaire within only 15 years. So guys, that's all I have for today. If you like this content, again, please smash the like button. If you are not a subscriber, make sure you subscribe so you don't miss this type of calculation updates. I always bring it to you till I meet a next video that I'm going to make very soon. Thank you very much for watching. Bye bye.